Hello everyone, this is Popeye, and today we are sailing together to the Old Wild West for the good, the bad and the ugly YouTube series. A video collection where I will evaluate some of the past trade that I took in the previous days in order to check the why, the what and the how behind this trade, in order to pick one good trade, one bad trade and one ugly trade. We will evaluate together this trade to see how I can improve on my trading journey, but also I will try to give you some tips in order to grow in your path to become a profitable trader. So stay with me here in the Wild West for the good, the bad and the ugly YouTube series. So as a good trade for this week, I picked a BTC swing short that I'm actually still riding, but let's say the trade is going pretty well. So for the sake of the series, the good, the bad and the ugly, I included this because I think it's the best trade I can show. So it was open almost 2 weeks ago, almost 20 days ago, and was an interesting trade. Is this swing long we have here? Interesting because of few reasons. So the first is the fact that Bitcoin, to explain you the context, was coming down from a very big drop, and the assumption of the trade is that usually after a very big drop, Bitcoin is usually consolidating. So to give you an example, when we drop from 126 down to 80k, so 45k drop of a downtrend, we started to go laterally for a pretty long time, for several weeks. So you know, I'm a range trader, but in this specific case, the range was not really yet formed. So that's where discretionary trading enter in place. So when we dropped from 97k back to 61k, I started to develop a hypothesis or a thesis. As usually Bitcoin does, after a very long drop, we would start to go sideways. So basically, based on this reading of the context and developing this thesis, the moment that I saw that the price started to go up in this move, you see there was an high here, we form another high here, I started to develop the thesis or the expectation that market would start to go sideways here. So the moment that I saw this sweep and the rejection in low time frame market structure break, I say, okay, I will go short, expecting a range to form. So I think this trade is a little bit particular because, as you know, usually I trade ranges when they are formed. So there is a range like this, the range is already somehow established, I wait for a deviation and then I take the trade. In this case, we had a very strong downtrend, price attempted to form some sort of range, we didn't yet know if this was truly a range, but the moment I saw this deviation, I decided to enter the trade with the thesis that, as I explained, that the range might be developed. So for sure was a little bit of a risky approach, but the reading of the context in this specific case was, let's say, correct, because indeed Bitcoin, after the short I opened at 70k, 71k, started to truly range for several weeks from the 5th of February until now. I'm recording this video the 25th of February, so it's already 20 days, and not only it started to range, but this range that we had for a very long time at the moment is breaking down and went far below value area low. Once again, maybe this range will be reclaimed, but let's say it's not the point of this video. The trade went very well, it went down almost 10k, I secured several times profit, I mean a couple of time profit, it reached almost 4R, but as long as this value area low is not reclaimed and this local range is not, let's say, deviated, back inside, I will ride my short to the next point of interest, that is this low at 60k, and the high time frame low that we have a bit lower, that is this low here at 59k. So I think it's pretty interesting trade, was so far very successful. I already secured some very good profit. So the good trade for this week is the BTC swing long that I'm still riding and was open back at the beginning of February. The bad trade for this week is another BTC trade, and you will see that in this episode all the trade are Bitcoin trade because that's where my focus has been over the past week mainly. And this was a long I attempted back on the 10th of February, so soon after this range was starting to develop, and I closed soon after for a small profit, and then I took some profit and then was closed at break even. So the trade is this one here. We will need to go a little bit on lower time frame to see it. So basically, what we had was that locally there was also, let's say, another range somewhere here, and I expected some potential choppiness. So the moment I saw that we started to retest 75, sorry, I think it's this one, the trade. Yes, was 9th of February. So the trade was actually this one, I guess. Yes. So the moment I saw this local level holding 0.75 being tested, there was some sort of demand left down here. So I say maybe we start to trade here. So I wanted to open also an edge long against the short that I just explained. So I think this trade, let's say, is bad because I just secured some profit somewhere here, I think. Then I was stopped out. But again, I think it was a positive trade, not as positive as the good one, the swing short. But I had some expectation of this local little range we have here to be starting to be chop. This actually happened. Probably I was supposed to secure the profit a little bit faster, but let's say not a bad read, a good read of the local price action. As you can see, we had this bounce and this local move, but perhaps was not necessary, let's say, to go aggressive here on this trade. So the bad trade for this week is this scalp long, let's say edge scalp long I attempted there in BTC. Could have been a bit a dangerous trade, but was worth to try. There was some confluence, as you can see here, with this Monday low sweep that was interesting trading wise. So there was, let's say, the tap on this demand, the sweep of the Monday low. So not a bad trade, let's say. I put it in the bad trade because the good one for this episode is much better than this. But for a scalp, I think it was a good attempt. So the bad trade for this week is this scalp edge long that I attempted on BTC back around the 10th of February. The ugly trade for this week is actually a trade that I took last week and was explained on the market weather bulletin. That was more or less this trade. Once again, it's another successful trade, so I secured some profit on this. There was no real follow through. I will explain you why. So it's actually not a bad trade. I put it in the ugly just because of the comparison with the other three, and also because over the past 2 weeks I didn't lose any trade, so I didn't have a real bad trade to share. So the point here, as you can see from the market weather bulletin of last week, Bitcoin has this local range. There was clear boundaries. So we had this move down with the 3 drive, this move up with the 3 drive. So I say, okay, it seems that we are starting to chop more or less, form a sort of triangle. If we keep chopping, probably, and if we start to trade on this triangle, probably is worth to attempt a trade here and to move higher. The price action there was pretty interesting because we came down to that level, that is this one, with these 3 drives. That was more or less this 1, 2, and 3. So the triangle that I was explaining was more or less this one, something like this. So okay, maybe we move up, we go down, we come here, and I was expecting some move similar to this. So the entry was super spot on and was again a combination of the usual suspect, the Fibonacci 0.75 that was very close to the entry, and my entry was at the beginning, I think, of this demand that we left here on the way up. Again, similar to this trade, we did get a little bounce. I secure just a little profit, I think 0.3 or 0.4, price then reverse, and that's where when I said, okay, I'll stop too long this downtrend here, because already we have a trader high, already we broke 0.75, people started to long this and this, expecting for a much bigger reversal, but at the end actually price broke down much lower and it went below 65k. So again, not a bad trade per se. Let's say the context was this potential squeezing here on this pattern here. Could have seen a little bit a better move, but it didn't really happen. As you can see here, the structure remain pretty bearish until down here when we have this little reversal and then foolish bearish again. So the ugly trade for this week is the second BTC scalp long that I have attempted. I secured some little profit, and luckily enough I move stop loss at break even, so it didn't make much damage. Before the summary, remember as always to trade with me on Bluefin. Bluefin is a super cool exchange, non KYC, so you can join just by clicking the referral link down in the description below to enjoy a 20% discount on trading fees, and also to be eligible to participate in all the cool campaign we run with the Bluefin team. So do not wait further and start to trade with me on Bluefin using the referral link down in the description below. So time for some conclusion. I think for the first swing short, I think here the takeaway is sometimes to apply a discretionary reading on the market have its benefit, especially if you have some experience. As I explained, in this case, the range was not yet well formed, but due to the fact that the context of Bitcoin was coming down from a very aggressive move from 97k down to 60k, in this case, I applied my discretionary judgment that a range would be formed after this long move. This time was not different, was exactly the same of all the other time when Bitcoin give a very impulsive move. Usually price then start form a range, so good discretionary approach to read the context and anticipate something that was not really happening and was the range. So I apply my range strategy even in a place where the range was not present, that was this sweep and the deviation, and then the range fully developed. So the takeaway here is once you develop enough experience in the market, also put some of your experience in some discretionary reading of the context to anticipate strong move, big move, because in this case the risk reward becomes extremely appealing. Like in this case would be almost a 6.5-7 hour trade if we go to final profit. Also the other takeaway is do not be shaken out by the chop. So I took this trade and I say, look, as long as this local range is not breaking to the upside, my thesis is that we are coming from a downtrend, so every range will be a redistribution lower until proven otherwise. So I've been patient to hold this trade until finally the expectation also in this case come to reality, and the range finally broke down and is still below range low. So very good trade, and I think important takeaways to remember. This bad trade, the first BTC long attempted, I think in this case takeaway is in this trade was based on an expectation of chop. So whenever you trade the chop, the takeaway here is be very aggressive. So be very aggressive in taking profit and be very aggressive in protecting your stop loss. Otherwise, you might end up being chopped out. In this case, I secured some profit, move stop loss at break even. Otherwise, the trade, as you can see, would be fully stopped out. So reading the context, if the context is telling you choppiness, in that case, be super aggressive, protect your stop loss, and make sure to secure some profit. The last trade, the ugly trade, the second BTC scalp long I attempted, I think the takeaways here is I'm a range trader, so I trade ranges. In this case, I probably attempted to trade, yes, a range, but more, let's say, a sort of expectation of triangle, let's say. Usually I wait for sweep, reclaim, and so on. In this case, I went and tried to trade this potential triangle that is not really the kind of trade I usually take. So the takeaway here is be patient, be more patient, and just wait for your playbook, your trading style, your trading strategy, and the setup where you really have an edge, and do not invent something strange. So just remember, again, none of this trade went really bad, but perhaps on these last two longs we could have some room for improvement on this review. So as always, I hope you enjoyed the video. I hope you find it helpful. Remembering reviewing trade journaling is probably the most important task we can do in trading. So make sure you always review the trade. And I hope this video series, the good, the bad, and the ugly, is giving you incentive and a good example to do your own. As always, make sure to subscribe to the channel, leave a comment and a like. Trade with me on Bluefin using the referral link down in the description below, and we will see in the next one. Stay safe.